Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner with us as always to talk all things markets. University of Missouri livestock economist extraordinaire Scott Brown. Good afternoon, Scott.
Wow, what an introduction today, Megan. Good afternoon.
No pressure on you this week. None at all, I promise. All right, as we get going today, the big report, supply and demand, and wow, there was a pretty big surprise in there, and we'll get to that coming up in just a few minutes. But let's recap what happened this week in the markets.
Yeah, on the cattle side this week, cash-fed cattle were nearly 90 cents higher this week. Those feeder cattle markets were anywhere from steady to $2 higher on the week. The December live cattle futures contract closed up 65 cents, and the November feeder cattle contract was up 20 cents. On the beef side, the choice box beef price lost $5.60 this week. That was really led by lower ribs, loins, and briskets on the week. On the hog side, the barrel and gilt price was nearly $4 lower this week. And the December lean hog futures also moved lower this week, down $3.55. Pork cutout value was also weaker this week, down a little more than 5 1/4 on the week. That was lower hams that really led the week, led the weakness on the pork cutout value.
Scott, we continue to see some declines on the cash hog side of things, and really prices have been under pressure. Are we possibly concerned about some long-term demand uncertainty? Is that weighing on markets as well? But then also what we're seeing in COVID recovery and kind of that whole big economic picture.
So, Megan, perhaps we are, but I'll just remind us that given where we sit today, these prices might have been higher than many of us would have ever suggested we were going to have in 2021. So, although they've come down from where we were a month or so ago, maybe they're still higher than they would have been otherwise. And when we get to our retail price side, I will say still have record retail pork prices. So it tells you something about some of the costs along the way from farm to retail are also, I think, influencing farm level hog prices to be lower right now.
All right, let's get into that supply and demand report. Let's start first as we take a look at livestock prices from the USDA.
Yeah, so really focused on 2022 projections now. And as I look at what's in the report, I'll say more positive for 2022 prices for livestock than USDA was in September. Fed cattle prices up $1. The big one was barrel and gilt prices. They were $56 in September. They're now sitting at $61. Even chicken and turkey prices are higher. So higher farm level prices projected in 2022. That's really, I guess in some part, especially the higher pork prices driven by what's a lower per capita consumption of pork. USDA down 1.2 pounds in October relative to September. But that's really the only meat that showed a decline in per capita consumption over the last month of USDA's projections.
As we kind of alluded to at the start of things, the big news really came on the feed side of things. And let's talk a little bit about the outlook as we talk about soybean meal specifically, and maybe some of the other things that USDA touched on.
Yeah, so it is certainly a tale of two cities here. So corn prices, USDA remained unchanged in October relative to September. So $5.44 season average price for corn is what USDA is projecting for this year. However, soybean prices much lower, and also soybean meal much lower. What was a $3.60 projection for soybean meal back in September fell to $3.25, so down $35. All in all, higher livestock prices and lower feedstuffs makes 2022 a little better for livestock producers, according to USDA in this report.
Does it also maybe nudge producers or remind producers some risk management and to capitalize on potentially some opportunities to mitigate a little bit of risk?
So I think that's a good point to make, and I'll start on the feed stuff side to have that discussion. certainly a lot of interest in renewable diesel and the idea that soybean meal is going to continue to be pushed lower as we expand soy oil use in that renewable diesel side of the equation. To me, there's uncertainty, certainly some potential strong demand going there, but let's not overlook opportunities to lock in some lower soybean meal prices. On the corn side, for me, it won't be long until fertilizer prices continue to be the big driver here of how many acres of corn do we plant next spring. If we continue to get the idea that fertilizer prices are going to be record high, it could curb corn acres and as such could try to push corn prices higher from where we sit today.
Gosh, that's really been the story as I talk to farmers around the country is not only supply chain disruptions and being able to get what they need, but where prices are going and what that potentially does to corn and soybean acres in 2022.
There's certainly, I think, going to be some intense look at where fertilizer is as we get to next spring, and then what is the relative corn and soybean prices look like in terms of that acreage battle. You can just see it's shaping up for an interesting battle as we get into early next spring before we see planting intentions.
It is going to be a very interesting winter and spring months and meeting season, I think, as we look overall. Retail prices also out this week. Scott, let's take a look at those and talk about some record prices there as well.
Yeah. So record beef choice retail price again this month, September, exceeded $7.75 a pound. It has done nothing but march up every month in 2022. We can say the same thing on the pork retail price, and little perspective here. We started at $4.10 on the pork retail price in January of 22. We now sit at $4.70. So it's amazing, just given where these prices have gone. We keep seeing, to me, what's relatively strong demand. I worry that consumption could come under pressure as we continue to see these prices move higher and higher. No indication of that yet. And I want to be careful to distinguish consumption from demand. I'm not sure demand's moving lower. I just think higher prices certainly reduces consumption, all else equal.
Do we get to the point, or are we getting close, or are we watching where that tipping point is, where maybe beef and pork isn't necessarily fitting into as many people's budgets, and maybe we start to see an uptick in chicken and other proteins as well?
So perhaps, and it makes me then go to chicken retail prices for a minute. The composite broiler price also setting much higher than where we started the year. We started at $2. It now sits at $2.15. I go, so some substitution can try to happen, but we're also getting almost all those competing meat prices moving higher. I do worry overall consumption of meat could go down at these kinds of record prices as energy costs and other consumer costs also are moving higher, and maybe crowd out that meat portion of food expenditures for some consumers at least.
And that story's been in the news this week too, as we head into the winter months, and something that we'll have to keep an eye on as well. Scott, as we wrap up today, consumer sentiment for October was released, and we saw a little decline this last month.
Yeah, that's right. So not moving the right direction in terms of consumer sentiment. The overall index for October was down 1.9% relative to the September numbers that we have out. And that actually puts it almost 13% below year-ago levels. I remind us a year ago, we were still talking a lot about COVID-19, but the fact we're lower than where we were a year ago ought to remind us that there's some warning clouds out there in terms of what consumers think about the economy, et cetera. The current economic conditions down 2.7% this month relative to September. That also puts them down a little more than 9% relative to a year ago. And expectations, the other part of that index, down 1.3% relative to the previous month. Again, I think there's some continued concern about just where the economy's headed. As again, we're seeing higher prices and bottlenecks on the supply side, supply chains that are certainly stretched. I think all of that has consumers concerned at this point in time.
Also, when we talk about that, or when you look at these, are they maybe, I mean, like, are we seeing some changes in these curves as we see maybe spikes in COVID cases as well, and some of the other challenges that we've been facing economically or to the economy?
So I think the overall numbers that we've gotten out the last couple of months have certainly been less positive, and I think they kind of tend to feed on themselves, and has resulted in some sentiment that's moved in the wrong direction. Whether folks agree, disagree with some of the things that we see happening in Washington, D.C., we've certainly had debt ceiling discussions that have been difficult. We're still trying to get budgets done for FY22, infrastructure, et cetera. It certainly has been a tough time in terms of how we move some critical policies forward as we look into 2022.
Scott, that'll do it for us this week. As we look ahead to next week, a little bit busier week for us with some bigger reports.
That's right. So we'll get livestock slaughter out on Thursday, and then finish next week with cattle on feed and cold storage.
Sounds great. We will talk to you next Friday.
Have a great weekend, Megan.
You too. For our for the weekly livestock market update delivered to your email box every Saturday morning, go to our website, brownfieldagnews.com. You can also submit questions and your comments there as well. And while you're in the cab of the tractor, combine, or truck this fall, check out the Great Brownfield podcast at brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.